Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update for commodities. We're going to work our way through the dollar, yields, precious metals, and the commodities and ETF that I follow. And I'm going to interject my financial opinions along the way. If you like what I have to say or you like my approach, you can definitely check out finding-value.com. You can learn the companies that I am invested in. You can see it in my portfolio when you search portfolio on the website, and you can see the companies that I choose. Again, I'm not playing the short term. I'm playing the big long term, big picture view type stuff. But a lot of people like the daily technical analysis update stuff. So let's dive in. Let's see what's going on today and what we've got happening. So we've got a large selling pressure move in the dollar. The bounce is weak. So what I would say is we are most likely going to head lower in the dollar at some point here in the short term. The setup is exactly like this setup. We fell down. It's like this setup's the same thing. What I look for is this large, big down candlesticks, and then the weak moves up that take more days than it does to fall. What that means is that the selling pressure is greater than the buying pressure, and we have not found an equilibrium between the two. So I think that this move is still intact. You can see large buying pressure candlesticks, the size of those, you can see them getting smaller and smaller. We came to a resistance point where we've got wicks at the top, and then the big red candlesticks start to accelerate to the downside. Classic kind of up, sideways, and move lower in a short-term picture. So I do think this could head a little bit lower in the short term. We're also seeing yields starting to put in a little bit more oomph behind it. So I do think yields could go down in the short term. But keep in mind, short-term price movements, anything can impact them. News, emotional changes between the herd, anything. The 10-year yield also selling off a little bit, down 1.11%. And that one's just been kind of moving sideways. We're in this flag pattern that does look good to go higher in a longer term type of time frame. The short term, though, we could dip down and come back to this bottom location there. Very possible. TYX, which is the 30-year, also getting sold off, down 1%. What makes it harder to get right in the short term is the 2-year looks a little bit more aggressive to move lower. The 30-year doesn't look that bad. And potentially, I mean, we broke out of this pattern here. This could potentially still go higher. So we're mixed on time frames. We're mixed from the 30-year not looking that bad, could go higher. And then the 2-year, which is the short end of the curve, looking like it could go lower. And it's always easiest to see when everything's about to go up or when everything's about to go down. But when they get mixed like this, I kind of just sit on my hands. I think, that the short end of the curve is going to be more volatile than the long end. So I kind of just sit on my hands here. TYX, TNX, it is at a very low level. It's compressed back lower. That is generally not good for precious metals. What this means is that the yield curve is still inverting. And like I said before, we're at a very low level, and this can stay low for a while. We saw that back in the mid-2000s where this ratio came low and stayed low for a good chunk of period of time. We could stay low for a very long time, which means the curve inverts and it stays inverted for a very long time. What causes this curve to invert? It's inflation, but it's also the housing market. And we saw today that the housing market had a big move to the upside in housing starts. We're back up to 1.6 something million, which is very strong. The housing bubble boys are definitely getting kicked in the teeth there. But it looks looks like we're at a low level and it's still inverting, and that's generally a sign where the markets, precious metals markets, don't like that. Bond prices up a little bit. Again, we still haven't broken through this resistance line that I've got put in there, and we're just kind of meandering around. I can't tell you which way this thing's going to break here, guys. It's a mixed bag. It really is on the short term. Gold heading a little bit lower, but still above that 1913 level. So we're still above support. Everything still looks good. And we're getting some data that's kind of mixed for gold. I mean, yeah, we had lower yields and we had a stronger dollar, but the yield curve also inverted. So it's a mixed bag, guys. It's really a mixed bag. What we like to see for gold to go higher, at least looking backwards at the 40-year paradigm, it likes lower yields and the curve to uninvert. It likes fear in that market of a recession. That's what it's worked in 2018, 2019. Silver getting hit pretty hard, but this thing's just been cycling back and forth. We had a little bit more of a move here. You could say that this is kind of a bear flag. We might come back a little bit and then head and work our way on up. It's just kind of consolidating here. Platinum down a little bit as well. Again, I've talked about maybe we come back here and gives me one good buying point again. I'm not mad. Let's take it. I'll take it. But it does look like the momentum is still lower, and it looks like that can continue in the short term. XAU to gold ratio, it is fallen back a little bit, meaning the gold and silver mining companies still are underperforming gold. That yield curve inversion, all that stuff, not as great for precious metals. The yield curve inverting basically means that maybe people are figuring out that the housing market is still strong and that more inflation could be ahead of us. The markets are forward looking. And again, I don't know that to be a fact. I'm just stating what the markets could be thinking. But we haven't broken out of this long-term downtrend line for the ratio. That is what we really want to break. The CRB index down a little bit. I know oil was down a little bit today. Natural gas was down. Precious metals was down. Down kind of across the board, across all assets. So we're down a little bit here today. It still looks fine. I mean, we've just been bouncing sideways. CRB to S&P 500 down a little bit today. Still in that downtrend, and we have not broken that downtrend line yet. GDX down, like I said, GDX, GDXJ, and SILJ all down. They're down quite strong, so this could continue in the short term, and all three of those. And it looks like we are coming back down to lower levels. That, again, the inversion of the yield curve. People got excited because the curve started to uninvert, which means recessionary fears are in the market. I think those recessionary fears are somewhat subsiding to some degree. We've got crude oil down about 1%. It doesn't look that bad still. I mean, it's hanging in there. We're moving sideways. We're above support. I know it was down quite a bit earlier in the day, but it's come back up throughout that day. So natural gas down a little bit. Looks like we could head a little bit lower. That is a bearish engulfing pattern here. So we could see a little bit more downside pressure in the short term. This thing has been basing out. I think it's an excellent time to start looking at companies in this general location, natural gas. And we still could go sideways for a while. Yep, I agree. But some of the companies I'd start to watch. I'd start getting them on my watch list for natural gas companies. And maybe even pick some off. XOP, again, we've broken out of this downtrend line here. And we've been sitting here pausing. We'll see where that goes, but it looks to me like we could go higher in XOP because I like this buying pressure move. If we looked at a weekly, it'd be a little bit stronger here. We've got stronger buying pressure. I'm going to go to the weeklies here just to show you guys what I mean. We kind of popped up here, boom, and then we're just sitting here like we're up against this resistance line, ready to break to the upside. It doesn't mean with 100% certainty that will happen, but on the short term, all you have is kind of lower probabilities, and that's what I'm seeing. We're going to try to break out, and we'll see what oil does. OIH down a little bit, 1.5%. This has broken its downtrend line and still looks good to go higher. We just had a down day today of 1.5%. But we got a nice buying pressure throughout the day, the hammer candlestick. Let's see if we can get a little, sideways to upward momentum. Sprott Uranium Trust down 0.73%. Again, it still looks fine. It's just resting before hopefully the next surge or impulse move higher. It's still in the cards. Everything looks okay. URNM down a little bit. We do have some buying pressure throughout the day. That's why we've got a wick at the bottom. It's still okay. Buyers can still come in here and push it on higher. URNJ did the same thing. It bounced off support. This could still work its way on up. This is basically a retest move there. So let's see what happens. It's up to the market and what it wants to do. TAN down 3.15%. It is still working and moving kind of sideways here. Is this a flag pattern? We have one last kind of move lower. It's possible. Again, the short term, anything can kind of move. Sometimes you get these last washouts before a big move up. I call it a false breakdown or a slingshot pattern or slingshot cheetah. What happens is people get long here. They force the market down, market makers do, or people in the market. They force it down, get everybody to sell out of their position. Oh, I must be wrong. It broke to the downside. Everyone gets long, like the big money gets long. They take your shares and then they rip it to the upside and people FOMO back into the stock later. That's the slingshot. And then they squeeze short sellers too. COPX down 2.8% or so. It's hanging in there. It's been moving sideways. We have a little wick at the bottom there, meaning people bought it back up. But, we've just been consolidating here. I think it's waiting for a move in copper, and we'll look at copper in a little bit. Lithium, it has broken out. A little bit of a down day today, but still looks good to move higher. We've broken that trend, and we could see a move on up, a grind higher. REMX, same thing. There's your retest move. And now we could be heading on up. So rare earths and lithium both look very similar, and they both look very good. S&P 500, down about 0.5%. This still doesn't look horrible. I mean, it was bought back up today. That's why they're wick at the bottom there. If we look at it from, this is a very short term, you can see this downtrend move, and it was bought back up towards the end of the day. Momentum is still heading to the upside. Again, that's weak momentum because it's a short term. Again, anything can happen in the short term, but still looks good. NASDAQ doing the same thing as the S&P 500, sold off but kind of recovered throughout the day. Still looks okay. Emerging markets down 2%. It doesn't like that stronger dollar. But I do think this is kind of like a retest type move. We broke out. It's kind of coming back, and then we'll see it work its way higher, grind on higher. XHB, the home builders, up 0.37%. We did have very strong housing starts. I do think that we could see a move to the upside if that housing starts remain strong, and I don't see it slowing down. Obviously, we're going to bounce all around, but I think we're going to remain strong for a very long period of time. MOO, down a little bit, just like the rest of the other commodities. On a weekly candlestick, still looks okay. Just down day. Copper up a little bit, 0.41%. I know the copper miners kind of ate it, but this still looks good to go higher. There's no real huge selling pressure in this circle there. The trend is still intact of the short-term uptrend. Iron ore, slightly lower, but still looks good to go higher. It's more buying pressure than selling pressure. This is just three little down candlesticks. Nickel, I know nickel was doing well, and it still looks well to do well. So nickel's still looking good. I still think that looks like it could go sideways to higher. Aluminum, down 0.24%, still looks fine. It's just grinding sideways. I think aluminum is going to do just fine. Baltic Dry Index down a little bit. This kind of mirrors what oil does to some extent. But we've broken out. We've come back a little bit, and I still think this looks good to work its way higher at some point with this breakout of this pattern. We've got Newcastle coal futures. Again, this is going to base out around this general location. I would be looking at entry points for coal in some of the companies probably pretty soon down in this range over here the next however many months. we've got a breakout and a retest. And generally, the retest is where I like to buy things. Ethereum ripping higher. We were talking about that last week, how I think that this is still looks good. We're back to basically a retest, and we could see it bounce here. It looks like it is bouncing. So that looks good, and Bitcoin's doing the same thing. It came back, did a retest, and it is bouncing higher. We could go into an uptrend here for Bitcoin and Ethereum. This is your bottoming pattern. It's an inverted head and shoulders. Here's your breakout. Here's your retest. I buy the retest, and then I hold on. I did not buy Bitcoin. I'm just giving you what I do and what I look for in the technical analysis portion of it. So that's what I've got for today, guys. If you guys enjoyed the content, give me a thumbs up, subscribe to the channel, leave comments if you'd like. And if you want, you can join our community at finding-value.com. Love to have you a part of the community. We do have a platinum question and answer session coming up Saturday at 7 a.m. Mountain Standard Time if you're interested. And I do midweek updates, and I will release that on Wednesday. And if I buy anything, I update the website as well. I did buy a few stocks today. I will put that on the website of what I purchased. And it was just, I'm just nibbling, guys. I'm nibbling. I'm getting some shares, getting some more shares. And I put the price of what I bought today. All right, guys, we'll catch you next time. This is Finding Value.